Hi, I'm Chart Gal Lori. I am part of the Chart Guys community, and I wanted to bring a video to you. I really had to think about what do I want to cover for the full year of 2022? What were some of my highlights? And I thought it would be more helpful if I would show you what I learned. So I learned more in 2022 than the prior 5 years combined. I had tons of aha moments. And I would say the first year of trading, of course, you have a lot of aha moments, but 2022 really showed me a lot. Of course, learning how to trade in a bear market, learning trending days. So I just thought I'd pull it all together and just kind of show you and walk you through what worked for me this year. And I'll tell you what didn't work and what I'm leaving in 2022. So, what did I learn and what did I ditch? My aha moments were trend days. That was number one. Trend days versus chop days and early identification. I have some screenshots to just kind of briefly cover what I mean and what I've learned. I've done a separate video on trend days and how to identify for Chart Guys members. You can look at that video. Again, all of these points, I could have a course on each point. So I'm just going to briefly go over them and just kind of encapsulate it in one quick video. SPY, 0 days to expiration. This was a gift for me this year. I forget what month it started in 2022, where SPX has expiration every day of the week instead of just Monday, Wednesday, Friday. It's Monday, Tuesday, Wednesday, Thursday, Friday, 0 days to expiration, and theta decay is my friend. Alerts. It's the cheapest trading assistant around, and yet it's the most neglected. So it's kind of strange that people don't use them, or that I didn't use them prior to this year, and I'll go over that. Short covering weakens the market. That was something I learned this week, and I saw it this year, and I saw it over and over and over. We would have a short squeeze and we would run, and then 3 days later we give it all back, and I'll cover points as to why that happens. Weighted sectors, you must know your sectors and what you need to look at. And then the weighted table I came up with the last few months for the pregame show, and it's a way of conveying what I'm thinking and connecting all the dots and objectively sharing with the viewers. All right, trend day versus chop day. Early identification, it's key. And I'm just giving examples of a bull day. Of course, you would just do the inverse for a bear day. But for a bull day, you want to see tick 5-minute 8 EMA trending above the 0 line. You want to see ADD pegged at 2000. You must have weighted sectors pulling the cart, and that's XLK, XLV, Y, and F. If it's the minor sectors, I don't trust it. If we're having a day where real estate, utilities, and they're pulling the cart, I just don't trust it. NQADD, on TOS, this is ADNDD, is over 65, meaning 65 of the 100 names are positive on the day. I don't short the market. And then the heat map, looking for those bright green on the major sectors, and knowing which sectors to cue in on is super important. So here's an example of a heat map of a bull trend day. As you can see, we have Apple and then the semis, which I call the fuel to the engine of the market. Look how lit up they are. They're the bright green. And you can see the legend down here, the key plus 3% is that bright green. So when you have these major sectors like consumer discretionary, technology, financial, healthcare was a little bit of a mixed bag, but it was still green. It's just hard to go against the market. And on bull trend days, and trend days happen about 30% of the time. The other 70% of the time we're going sideways. I'm generalizing, of course. But on those trend days, those are the days we can get the home runs. On the other 70% of the days, those can be the singles, the doubles, and so on. So when you identify a trend day, step up to the bat and swing hard. Here's an example of ADD on a bull trend day. So I have all of these in different pockets, like 6 different tables, but I broke them up so you could see each one. And tick and ADD are my most important market internals for me. So, and then NASDAQ ADD. So advancers, decliners, as you can see, we were pegged on this 5-minute chart. We gave back a little, but we never dipped below 2000. This is a bull trend day. We have more names advancing than declining. ADNDD, this is exclusive to TOS, but TradingView has NASDAQ ADD measurements that you can look at, and they measured a little bit different. This one is easier for me to just at a glance. If it's over 65, don't short the market. And there was hardly, right here, we had a double bottom at 65 and we kept going up the entire day. That's a bull trend day. Tick example. So I just converted the tick candles to a line, so it's a little bit easier to see. And this is a 5-minute chart of the 8 EMA on tick. And so my tick trick is what I call it. My tick trick is if the 8 EMA on the 5-minute is trending above the 0 line, you've got yourself a trend day, and vice versa for a bear trend day. And look at this. We only touched the 0 line for a hot minute and then bounced. Trend day. Okay, then the second gift that I was given in 2022 is SPX 0 DTE 5 days. Oh, my hair is crazy. 5 days a week. It was a huge gift. And here's my approach. Again, this is very simple. I'm making it really simplistic. It's actually somewhat complicated and risky, which is why I haven't been able to roll it out to the community yet. I'm trying to find bumper guards to put on it so it's a little bit safer for folks. So, and I've had to flesh it out. December, it didn't work as great as it did in August, September, October, November. So I wait for the first 30 minutes to pass in a trading day. Sometimes there's data 30 minutes after the market opens, and that can change the tone of the day. And then I sell to open either 6 or 7 delta spreads, $30 wide in the direction that the market is dictating based on price action and internals. So if I think we're having a bull trend day or a bullish day in general, I will sell puts in the opposite direction. I'm selling to open, and I'm hoping and waiting for theta decay. My goal is to let them expire worthless. The approach, why do I even love SPX so much? Well, the theta decay, I'm getting it intraday as favorable tax treatment, special section 1256 treatments. You're getting a mix of short-term and long-term capital gains, approximately 23%. Of course, this is for U.S. citizens. Check with your tax professional. They are cash settled. They can't be assigned. Again, check with your broker. And what I learned in December, it does not work on risk off days. So that was a lesson I had to learn, and I'm adding that to my tool belt. And then again, I can't wait to roll this out to the community as something that they can pick up if they're interested in this strategy. So in December, we had a lot of risk off days, meaning FOMC, CPI, GDP. And on those days, this approach does not work. So December, I was slightly red, but I'll show you my results from August 1st. So I started this July 1st. So for the month of July, I took notes, I paper traded, I traded for real. And then I said, okay, I'm rolling out the approach officially August 1st. So from August 1st to December, so 5 months I had of this data. It worked really well for 4 months. I had green days in December, and then I had red days. So I'm still honing in my approach. I will roll spreads if they aren't working in my favor. I wait until they're within 10 to 25 points of being in the money. This strategy requires a large amount of margin and option knowledge. So there is some barriers to using this approach. In my swing account, I would do the next day. I would do a combination of same day and the next day of SPX. And in my day trade, I would do same day XPX. And I found that the same day just works so much better than the next day. So here are my results from August 1st. I took this screenshot 12/29/22. My profit and loss for the swing account was $118,000 for the year from August 1st to 12/20. Well, this is for the year, and this was the profit and loss for August 1st through 12/29. So I had some losses in July learning to trade this approach, but as you can see, it worked pretty well for me. That's pretty good results for 5 months. And then in my day trade account, same thing. I had some losses prior to August 1st, learning this new strategy, but from August 1st to 12/29, I made $84,000. So overall, about $196,000 in 5 months with this SPX selling credit spreads. And I've been documenting this and where I mess up and this is why I love trading, is we can try new things and constantly learning and evolving. And I'm sure the strategy will continue to evolve. Alerts. Alerts is the cheapest trading hack that is so underutilized, and you can use them in Toss, in Fidelity, whatever broker you use, or TradingView. I use TradingView. And you can use these alerts on price indicators like RSI. RSI overbought and oversold for back burners and reverse back burners. If you don't know what a back burner setup is, we have a video on YouTube that Dan created on what is a back burner and how he used it. And I would say for this year, being in a bear market, learning how to do reverse back burners was huge. It's definitely an honorable mention of my aha moments for 2022. All right, short covering weakens a market. So I had never realized this till this year because I saw it a lot in a bear market. We would have these market rallies and it was a lot of short covering. And I've seen short covering prior to 2022, but not as rampant as this year. And the problem is it doesn't build scaffolding or structure or support on the way up. It just goes. And then when price starts to consolidate and come back into those ranges, it can fall through swiftly because we've established no structure. Money leaves the market with short covering. It reduces the buying power that's on the sidelines. So when it does come back, who's there left to buy? The weighted table concept. This was a table concept I came up with probably in the fall. And I did it for the pregame and ended up, of course, helping my trading as well. And I'm also playing around with Market Environment Dossier, taking my meds in the morning. I use this table to objectively connect the dots to transform my correlations into something tangible. And it's a way of me translating my English, even if I speak English, it's kind of questionable, to Spanish. And it's like my translator. This is how I turn something subjective into objective. And then with the table, I'm also learning what information is most important to carry forward versus what is okay to drop. If dollar was in a bear flag and dollar is no longer in a bear flag, I don't carry that narrative forward. And minimizing what I carry forward is super important, being able to cull what you're hanging on to and what you're not. And it's kind of squished. Here's a copy of a weighted table that I did the other day. And the yellow is what I'm bringing forward. This is the most important things for the day that I'm looking at. And of course, the weighting is arbitrary based on my trading experience. You could think that price patterns are way more important, or you could add RSI bull divergence if that's something or bear divergence if that's something you depend on heavily. So, and then I check off based on, for ES, here are those time trends. And then for like Bitcoin, if I see that 4 hour, like as you can see on this day, the 4 hour was really screaming at me, then I use that data. If you filled out this table, you could probably get a totally different result. So that's how I use it. Oh, sorry. And then you see those weightings. As you can see, going into this day, it was a push. We were pretty tied on bulls and bears and the evidence for each as to who had more power starting the trading day. Knowing your holdings, I think this is a snapshot. Oh, this is November 30th. I should have gotten a more recent one. But Apple is the largest holding in SPY. But if we go look at QQQ now, Microsoft is the largest holding. And technology has been culled down from 28 to 27 to 26. In December, it was 25% of SPY. So and XLY is now below double digits. It's like 9.8% of SPY. So that's Amazon, Tesla primarily. So knowing what's important to pull the cart, if I'm trading SPX or ES futures, which I trade in another account, those are my primary two vehicles that I trade, then I need to know what the key sector holdings are and who is pulling the cart that day. So if I see Apple and Microsoft falling and United Healthcare and Johnson & Johnson, you better believe that I'm not going to be in, if they're all falling, I'm not going to be in bullish spreads for SPX. And what did I leave behind in 2022? Depending too heavily on option statistics. I follow unusual option activity. I still follow it very loosely. I think it's difficult to follow. Price is much more important. It's kind of like finding a needle in a haystack. You may find someone bought BIIB calls 2 months ago for 3 months out, knowing that an FDA study was coming out. Maybe someone knew something and it was insider buying, or it could be a hedge. You just don't know. So relying on that very heavily is just something I left in 2022. I don't know that I'm going to come back to it. I still look at it. It'll make me go look at a chart, but I only base my trades on technicals only. So I would say I've minimized the importance of options. And those are all my aha moments for 2022.